You're very welcome.
I'm glad you're here, Miss Cordelia, because my Zoom was lagging and wasn't letting me get to the record.
Oh, I'm glad I'm here too, and always good to hear your voice. You lift me up, and Barbara just then adds on to it, and my day is good.
That's a good
Thank
way
you
to
so
be.
much. Yes.
Well, good morning, everyone. Thank you, Miss Barbara and Miss Cordelia. Drew, good morning. Barika, hilarious. Top of the morning. Are we close to St. I think we are close to St. Patty's Day. I probably should know what that holiday is. I don't, if you want the truth. I know that yesterday was the beginning of Lent. So each of us will be kind of just sacrificing something to whatever you call your spiritual world, right? The whole concept is to sacrifice to feel that. So even my children have done that for all the things we fall short on, and we do fall short. We usually get that part right most years. So I'm excited. 40 days, and mine will be coffee. Ugh, no coffee. But I've got rise and other things, so we'll see. But good morning, everyone. So, a couple of things. I'm going to just click through this so it's on the recording. Most of this you guys already know, and since we have a very just amazingly loyal participative, that's a word, but I think I said it wrong, community. Most of you guys already know this stuff, but just for the people who are coming to the recordings or only listening to the recordings, I want this to make sure that this is on here. So, favorite present we can erase. We can discuss if you guys are doing Lent or what you're going to do for St. Patty's Day, what have you. Didn't really get a chance to discuss Mardi Gras, but that would be fun too. I'm going to mute you, Vince, because there's some, oopsie. And then I asked you to unmute yourself. Sorry, guys. It's always temperamental. There we go. Just to make sure there's no background noise. Anyways, so disclaimer, you guys know all this stuff. Just be good humans. Just good humans, and that's good for all the companies involved. And you get to grow a lot too. So the more that we get to do together, the further advance in your life you get to get. Energy, I'm big on this. If I had a better way of being that speaker, if I had a better way of being Sarah Jakes Roberts or Gabby Bernstein or whomever, Amy Johnson, I totally would. Tony Robbins. This is everything. I think I'm gonna compile this thought process to share with you guys. There's a book. It's called the Kind Way or the Kindness something. And I was listening to quite a few different things from this author, and so much of it tracked back to trading because obviously what we're doing is psychological. So I'm really excited about that. I don't have all the words to tell you that this is everything, but if 90% of what you're battling is not the strategy, I mean, we can pick almost whatever strategy you want, game out some management, and I can almost promise, I can almost guarantee that we can get to a profitable sum within 90 days. With most strategies that are sound, they have to be, back testable and provable, and the management has to line up to the strategy. But I really feel that strongly about this industry. So what does it come down to then? It comes down to you. And that you factor is something that I don't know how to teach or preach. I can just come up here and say, hey, let's work on this. So order of operations, you guys already get the drill. We're a couple weeks into great profits, also means we probably have a loss coming. I despise saying that out loud because I'm a prosper where you're planted, speak it into existence kind of girl. However, when there's people following you and there's a community and there's an audience, I want to come to the table as honest and as real as possible. So why is it so important that you have a consistent lot size that's risk percentage based? I don't care if it's risk on reward or risk on loss, but it's consistent in what you're doing. The reason why is weeks like this. Everyone assumes it's for the anomalies and the bad weeks. It's not. You also need it just as badly for the weeks that are good, because what happens when you have 2 or 3 solid winning weeks, you end up going a little bit aggressive, just trying to get that next bump over 50K, that next bump over 100K, that next bump over 10K, and then poof, goodbye account, it's all gone. So with that in mind, I don't even know where I was going with that process. But anyways, risk to reward, blah, blah, blah. Here you go. This is what we're doing. We're calling a couple winning trades. I would anticipate a loss coming at some point soon. Indicators, everything we do is on the charts. For the most part, everything that you need is available in that community. It is in the Telegram group and or will be on the website. And that's it. Anything else, things like simplicity, I talk about that twice a month. Something like cool trading tools, we can talk about that twice a month. But otherwise, everything you need is within your fingertips. It's the same kind of concept, everything you need. And I promise we can cultivate it your way to help you see best but it's all within the, your reach, and it's all right there. So this is what we're doing and what we're using. $1 million today. I just can't get rid of this, because this is in a roundabout way exactly what we're doing. And I just think it's so motivating and so down to earth in its own pie in the sky way. So how to compound, I like this better. This goes into every single thing you can possibly manage. If you take a screenshot of this and actively do it, plug in your actualities and your hypothetical risk to rewards, your hypothetical and actual win to loss ratio, your hypothetical and actual win, so percentage of accuracy. I'm trying to choose my words right. This is it. This is all you need. Literally nothing else. Literally. And it's so hard to say that, make people believe you, but it's the truth. So management, focus more on up here. Okay. We're using a 1 hour stop loss with all this is really a structure with a 1 hour ATR cushion. So you can bounce it around. We have moved it down to 0.5, I think 0.75 of an ATR, just testing different things. But in general, across the board, this is what we've been doing for umpteen long time. Take profits are always looking at areas of interest, and of course you can manage in between how you see fit. All I'm saying with those take profits in those areas of interest are you're making a decision at that level. That decision may include, but is not limited to, scaling at a center of your position, applying a trailing stop, moving your stop loss into profit, closing for the full scalp amount, and just being done with your day. You have umpteen options. It's going to be up to you which ones you choose. Scalping, of course, you can do comparable things on a smaller time frame. You can get your trigger entries with your trigger stop losses, and you can technically have a lot of success. This method just takes a lot more active trading. So for example, on the trade that we call, and then it goes and goes and goes for days and weeks in some cases, when you're scaling into that, you take your one entry and you're letting it run, and it's a 20,000 pip move. You might have taken a few entries in that direction, but you're not worried about getting wicked in and wicked out. You have a basket of trades, say 5 to 10, that are 9 out of 10 are winning. Okay. You're going to have some that just popped around. That's, the first one or the last one, or there's going to be one in the middle with the bigger pullback, but 9 out of 10 of them won. They all averaged a 2 to 1 or 3 to 1 or better risk to reward ratio. That one analysis, that one trade idea on TradingView, or that one trade analysis on MT4 is literally enough to have taken your $1,000 account and bumped it up close to 40,000 in one trade analysis. If you're trading it and compounding it and scaling it right, it's possible. It just takes a skill set to get there. So that's all I've got on that. I'm going to hit stop share. I kind of don't want to spend a lot of time on that every day, but maybe once a week. I don't even know. Don't ask me. Always a work in progress. So real quick, here we go. Here's what we're at. Simplicity had a great week, by the way. Great week, and a horrible week with the one before that. And again, that's real trading. Here is where we're at this so far for our year. We're doing really good. It is not perfect. We're averaging a 91% accuracy, which is amazing. 91% is not nothing. It's great individually, but live, oh my goodness, that's awesome. Live, like publicly, that's hard. That takes a lot of discipline. And the reason why I'm kind of focusing on that is because once you guys get good at your analysis, all it comes down to is you go analyze your chart, you take a look real quick, and then you take a couple of entries a week. And as your skill improves and your ability to see the market, you'll average 80-90% reasonably easily. So far, here's what we got. NAS, and actually we had a couple of others that continue to move, but I had already cleared the board on those, so I did not. Many of these trades moved exponentially more than the pips we are counting. So if you go back historically, and again, everyone wants to talk about the counter narratives, which they have a place, don't get me wrong. But many of these, just so you know, had this, that, and another, true, but they also have another 3,000 pips on this, another 2,000 pips, all within the targets that we called. Not this one. This one hit all 9 because that was a scalp. But to kind of give you an idea, either way, please know that this has got slippage and interpretive, subjectivity on both sides, but just recognize it's on both sides. The same kind of concept with EAs. If we can recognize that there are some anomalies and some situations on both sides, right? But we can't just try to adjust for the negative ones or adjust for the positive ones. We have to account for all of them and make a basket. And that's kind of what we've done here. So this week we're up about 1,700 pips. Not super impressed with either of these two trades. Either. Super unimpressed. Completely do not recommend. 2 out of 10. I can't believe what they're doing on the charts, but we're going to go take a look at those here in a second. UK still has room. We're forming a smaller time frame double bottom. I think this still definitely has some room, and we're going to go look for a couple more setups. So stop share. I'm going to get this out of the way. Close. Where am I? I'm going to minimize this. Go to trading view. So I was a little tempted. I'm not going to fib. Let me pull up my tablet too. Dun, dun. We should open up. 1 second, gentlemen, ladies and gentlemen. You would think it would let my thumbprint work. I was a little tempted to literally skip this part and just go straight over to MetaTrader 4 because I was looking pretty heavily at the indices this morning, looking for that impulse move that we were all looking for. So let me go down to 1 minute time frame, smaller time frame. I don't want to spend a lot of time on this because I'm looking for the bounces on the indices. We know I'm going to have to clear the board on this, but just to even have a conversation worth having. Did this come and wick down? Yes, it did. This is from a hot minute ago. This is from Tuesday. So we're still staying above this level that we drew all the way back in on February 7th. So it's a long time ago. We didn't create this level this day. We created this level way back here. I still think this has some room to the top side, but it's not ready. We knew we caught a couple of these sells down. We caught the majority of this sell down. Now we're just looking for that little bounce up. Are we going to get it? Cannot say. So I know we're going to clear the board on this. I'm going to zoom. Let's try this. 0 and huge, nice big wick. We did wick lower than where we had previously stopped. Going to the line chart though, we're all within range. So we're the volume of price, the heavier portion of price is failing to make a lower low. We wicked down, sure. We're trying to knock everybody out. But otherwise, we still have a lot of room to the upside. So to clean this up, since all of this stuff from previous, we're good, we're done. We already know about all these moves we caught. We are good. These levels are great, but we don't even need those. So I'm going to right click, remove. Yeah, I'm doing it. I'm doing the thing. Back to candles. The markup gold. Candle part of the candle that we're on. This is a big wick. Huge, huge wick. Let's see. Bear with me. Just starting from where we're at, not taking a whole bunch of time. This is a candle prior to the one we're on. All we're doing is looking for our areas of interest. Since price is moving up, correct? We're going up first. Pretty simple. You can go to the line chart or you can go to candles. Totally up to you. But I'm looking for, if this is the body, right? I'm looking for those areas of interest. Now that's too far. The potential double bottom, not quite solidified yet. So this is going to be the volume of that double bottom, that W if you would, here, and come all the way up into this range there. And of course, I'm going to be picking here. So those are going to be my 3 major targets. As we break above, I think we have a lot more room, personally. A lot more room. If we're only looking for 3 targets to the top side and 3 targets to the downside, this is it. We don't need much more than that. We can go 4. Okay, that's totally fine. But to keep it clean, we have to limit ourselves to some extent. Like if we're really trying to analyze this on the huge time frame, we're looking at the big picture by all means. But otherwise, we don't need it. We don't even need it. So let's see. Here's where we're at, all the way into this range. So is my bias, of course, to buy? It is to buy. Let it go. Let it go. There we go. But if we continue to break down and continue making more lower lows, what are we going to be looking for? I have to go all the way to the daily to find these because I'm not going to be able to find those on the hourly. So here's where we're at. I'm going to zoom in. Here's our low, the volume of our low most accurately. Zoom in again, because I'm not going to be able to go much lower than that. Probably not. There we go. This is the low that we'd be looking to break. Of course, there's going to be some levels in between. The price is sitting there. That's a really good first low. This is daily, so these are going to look really close. What else do we have? There's not a whole bunch for, I mean, go down to the 4 hour, but we're not going to be able to see anything. There we go. Try at least. Move this a smidge over. Move this a smidge over so we can see where it's coming from. There we go. I like this. It's prior to this low. Where's next beyond that? If we are continuing, so this is our high. We continue to break this level. We've got a few more levels to the downside, but this is our next low right here, which is a pretty big ask. Is it possible? Yeah. I think we still have another big push to the downside coming, but right now we don't have any reason to be taking it. We're just looking for the retracement on the buy. It's right into there. These ones are a bit bigger, mostly because that's a daily time frame, 4-hour time frame that we're looking at. These ones are a little bit smaller. If we break out above this, we already know where we're going. So if this does turn out to be the double bottom and now double bottom 4-hour time frame, we know where our targets are going to be. We already know. If we break above these areas, where else are we going? We can do this all day long. All day. I would like to see it to come up into this range. A little bit lower than that. Move this a smidge lower. Candles, I would like to see it come all the way up in here. I think that's a pretty big ask. I think coming into this range and wicking around this last zone is a lot more likely. But either way, we've got both directions. Now it's just a matter of going to the chart and knowing when and how to take it. So, brand new clean markup for gold. There's our gold. Clean this up a little bit. I really should lock all of these though, so they don't get manipulated. And let's see, this takes a long time to play out. If you guys take a screenshot of this, and I'll go up to the 4-hour just so you guys can see it. Take a screenshot of this, see how this plays out, see if and how these levels are respected, rejected, or insignificant. Sometimes they will be. Sometimes they will definitely be insignificant. No way around that. But that's gold. Gold. US 30, beautiful. I do think we are going to remove everything again on this. We were in this beautiful zone that we had marked up. I'm going to go all the way to the daily. Come on over. Down to the 4-hour. Well, keeping on the daily just so we can see this. Weekly signs that we're looking for the sell. I don't want to forget this paragraph because it's significant. We are still looking for this bigger potential move to the downside. Are we going to get it? How are we going to get it? When we're going to get it? Can't say. But bigger time frame stuff, I still think there's a lot more information and correlation and a basket of information that is saying we have a lot more room to sell down, fundamentally and technically speaking. But since we're not trading on this big of a time frame today, yes, I'm going to be looking for that short-term buy. So now down. Well, I don't want to delete everything, actually. I really don't. Really don't. I'm not going to start fresh on this because we've got too many relevant zones here. So because we have all these relevant levels, here's the price point prior to the candle that we're on. We rejected off this, formed a nice spring. US 30 is notorious for its springs, right? It bounces in one direction, then takes off. I am looking for the retracement buy on this pair. Coming up into this area, all the way up into this area. Let it go. There we go. Looking for the retracement buy. How much of this are we going to get? Are we going to come all the way up into this zone? Possible. But this is what I'm looking for overall. Dun dun dun. Got it. 1 second. Okay. That is US 30. I don't know why that's clicking off on my other device here. I promise. Without the coffee, my brain is just as clear. I promise. Said no coffee lover ever. Ever. It's supposed to be funny, you guys, by the way. If we need another level to the downside, we know where we're going. Long term, yes, I'm still looking at this to the downside. I don't want to sleep on marking that up. So from the price that we're currently at, I'm looking there. And then below that, I'm looking prior to that peak. What that looks like on a candle is it's going to be before that wick zone. It's going to be before this wick zone. Well, it's going to actually be that wick zone more accurately on this one. We've got our nice levels if we do continue to break through. Very likelihood. Otherwise, today I'm just looking for that little instant scalp. Talked heavily about Ripple. It's still sitting pretty still. We've talked about it sitting still pretty much every day that it still sat still. So here's where we're at. Yes, overall, I think we've got a lot of room to the upside. Let this continue to consolidate. Maybe consider letting it have a little bit more spring room than this particular take profit box, but definitely not a bad way to be. We talked about this one. We can actually erase, I think. Let's go up to the 4-hour. We talked heavily about GU, so we can zoom in and see the candles a little bit better. But we knew we caught here, we caught here. We've caught a ton of pips on this pair. And yes, what was it, Tuesday? We were looking for this to break. It did break above, and now it's retesting. So if we continue to only have a wick zone down here, we've got a lot of reason, several different patterns, formations, as well as a break and a retest of a trend zone that says trend line, not trend zone. What did I think? Trend line, not trend zone. That says we have potential to the upside. So big ask, considering what we've seen Euro USD and gold both do. They're supposedly very correlated, but just something to kind of definitely be mindful of. Yes, today I am looking for this move. I'm only taking it with confirmation. I'm only taking it with my strategy. I'm only taking it. If we break below that wick zone, this level, we know we've got a very short-term level and then a bigger level. So we know where all those areas of interest are at. They're not super hard. So we've got our first one. It's going to be down into here. If we do break this low, the volume of price low, we've got our next level. If we break below that, I'm going prior to this peak, we've got our next level. Go up a little bit higher. Actually, I'd like to see what that looks like. There we go. I want that level. That level, and I can live with that. These are the areas that I'm going to be looking at if we do continue to break this area. But if not, overall, I'm looking for my upside. Just trying to give you guys a both dual-sided market kind of analysis, just so you can see where those areas of interest are at. So that's to you. Now, again, same concept. I'm looking for the buy, and it's taking me time. And now this is, I'm lagging, and it's moving. I know it's moving because I've been looking at this all morning. I'm in a couple of them though, so that's okay. But if this is what's happening prior to opening bell, then we know we've got a little bit of room after opening bell. So yes, right now, today's analysis is I'm looking for this to buy up. I don't want to remove this mostly because this has been such a long-term zone. So if we did, I think we're going to individually remove everything. This is our high. Oh, this is our low. This is our high. We are literally 61% into this zone. Definitely think we have another level to be pushed down to, but for today, we're looking for that short-term buy. So not marking that up any more than that. Stop. Sure. Let's go to the VPS, to the right portion of the screen, and we are here. S&P. I am already in a couple of those trades, so it's going to take us time to run our mouth, period, no matter how we talk about this. So if you know what you're doing on the Thursday template, by all means, please go take a look at US 30, go take a look at S&P, and start with there, period, across the board. You also have gold, but it's going to take me a second to bounce through this being Thursday. So actually, I can review these trades on Tuesday. Here's where we're at, 5-minute UK. We already hit a couple of take profits. I do think there's a pullback coming. Tuesdays, whatever, this is 900-ish pips, 940, something like that. Great trade, big time frame stuff. This has plenty more room. Doesn't mean we knew that we're going to get a reaction at that zone. Let it pull back. If we get the confirmation, we take another trade down into this next key level. Perfect way to be. So that's UK 100. Oopsie, gold. Gold's a little tricky. We did pop into range a couple of times, just in a take profit too, and stayed above this level for a while, but we popped down, retested that level, and then sprung to the downside. I still think we've got some more room on the upside. I just don't think it's been ready yet. So this might be that final level that we were looking for. Any trade we try to take is going to be a counter trend trade, no matter how we look at it. This is the 5-minute time frame. This is us catching take profit too barely without making a lower low. That's gold. And then of course, this was quick, but I'm very shocked to see how much this actually moved to the downside. It moved a hot amount comparatively. So here's where we took our entry. We popped up perfectly. No real drawdown. Not every trade is like that. You guys know some of them are awful. Awful. This is only 20 something ish pips, 20, 28, 20, something like that. Not a whole bunch, but easy pips. And again, a couple percent on this pair is a couple percent, regardless of what pair you're on. It's just all about how you manage it. So that is Euro USD. Not a bad day. So Swazi says NAS and on the 15-minute time frame. So first things first, here's this spring. I do want to come back to this. I'm very much so. Here's another double bottom. Looking to see if we're going to get this buy up on gold. I still want this buy. It doesn't mean it's ready. No, it doesn't. Only the 4 hour, it doesn't. But we've got to now, we're bouncing off of structure again for another time in a huge wick of rejection. So overall, I very much so want to go take a look at this today. But let's go to the fastest mover of them all. Let's go down to the 15. 15 minutes got to buy. So this is all that I would be doing. We're already bouncing down, so that's perfect. We're already at a better price than if we try to take it here, 192 pips above. However, we have not got the continuation from the close of this candle. Does this wick higher? Technically it does. This is the close. This is the wick zone. This is the close of this candle. It technically does, without a doubt. But in general, so this is where we're getting that trade idea. All we're going to do is say, okay, so at the next turnaround point, never mind. I'd like to just keep it, but I'm not going to. Actually, I am. I'm going to drag this out of the way. So it's not a trade idea just yet. I want to drag that out of the way so I have it on there. I don't have to remake it later. So let's go here and make this blue. All we're doing is deciding if we take this as a 15-minute analysis, is this cost effective to do? And we'll pop down to a smaller time frame, but first let's do this. Figure here's our entry, give or take. Remember, our first take profit's about 300 pips. We're very likely to get a response or a reaction somewhere around 680-ish pips. Very, very likely. Your most recent low is 800-ish pips, and that's without any room. And below that, we've got 2,200 plus a 1 hour ATR, which is going to make it about 2,500-ish, depending on where the entry is. As you can see, we're pushing down. It's going to be like, what, 2,000 to 3,000-ish pip stop loss if you're managing this in the 1 hour time frame. Okay, not horrible. Here's where we're at. Current low. Here's the current low. Cool. So first things first, I'm going to go down to the smaller time frame. Zoom down, put our little line chart on. It's going to take too long. Hold on. It is taking too long. I'm going to move this all the way up here. Give it a second. I've got to drop it, unfortunately. 5-minute time frame, 15-minute time frame. I wanted a better view, but I'm not going to get it. Here's where we're at. I'm going to put it at the wick of this candle. I'm going to put it down, and the second I let my mouse go, I'm going over to my live chart. I'd like for this to pull back a little bit, but if not, we're going to have it. So I'm double clicking 33,198. I'm going to be much later than you guys, but I'm taking that active entry. Now, granted, I wouldn't be surprised to see a pullback. I would want to see a pullback. But let's go finish analyzing this since I could not keep up with my overall. Here's where we're at. Here's your low. Here's our entire low. So there's literally nothing lower than this if you're managing off the 1 hour time frame. This is it. But where will we be going? Got our ADR low. All the way up into this range. This is a 30-minute time frame, so these aren't the baby scalp moves. This is the bigger picture, if you will. This is about 600, probably 300-ish pips from where we actually got in. So looking to the left, I need a better, much better view. One moment. Not falling in love with that. So here's our most recent area where we've had any kind of a interaction. Any kind of interaction. Not super in love with that. Double click. Double click. Keep that still. This is all the way at the 4 hour, guys. It's a pretty big, these are pretty big areas. I'm gonna go slightly above this area. And of course we've got into here. This is the 4 hour time frame. So let's zoom out. Let's pull this on real quick. Here's our low, not including any kind of a cushion, because I've got it on the line chart for the moment being. Here is our high. We've got a 3 to 1, 3.5 to 1. As you add a 1 hour cushion, that's definitely closer to a 2.5 to 1, and that's for the entirety of the trade. If you're managing on the 1 hour time frame, if you're managing on the 1 hour time frame, you're still looking at, that's still not loading. Come on, baby. There we go. It's catching up slowly but surely. Let it digest. It's just kissing the 50, so that's a really good entry if you have not taken it already. Really good 50. Really good retest. I'm going to zoom in. So if this is what this is looking like on the 4 hour time frame, where is my major target? We've got take profit 1, 2, and 3. I'm looking in this range. I'm looking for it to come up and kiss this, and I need more take profits than that because we're not managing this on the 4 hour time frame. I needed to see at least the key levels. Do I think we're going to continue to push higher than that? I don't. Is it possible? Yes. But in general, we just talked about that big picture stuff. I think this has more room to the downside. But are they going to let that happen? I can't say. I have no idea. None whatsoever. If we're continuing to push above and beyond this, I would expect that impulse and kind of springy action and a retest coming all the way up into this level. All the way up into this level. If we break above here, remember, I'm not going to target that high. I'm going to target prior to that low. I'm going to target here. Right? Over and over again. Over and over again. These zones are a bit far apart considering this is US 30. We're in drawdown. Yuck. 40 pip, well, 400 pips in drawdown. I'm in 400 pips of drawdown. 7,300-ish pips in total. 7,300-ish pips in total. If you did not take that later entry, right now you have 385 pips-ish, 350, 330 over where I am at. Because now we've got that bounce off of the 1 minute 50. You've got the bounce, you've got the confirmation. So you have a slightly better entry and a quicker way to get your pips, if you will. But back to candles, back to where we're at. 5 minute, 15. Put this as a trade idea. These zones are kind of big. 7,000 pips is a lot. Here's where 3.9. My actual entry is, hold on, that took too long. I'm trying to mess with opening bells. Why? 33192 is my actual entry. 33192. But it's also probably different. Maybe a live broker. Like I shouldn't have a better entry. I dropped that line and then went over here. I might have pulled back a little bit, but that's my actual entry. Is 33192. Back to the levels. Let's take a look. Here's where we're at. 3.9. That is a big zone in this range. It's too big of a zone for a pair like this. So what I'm going to do is go ahead and make our here like that. I still like the ADR low. I would need to split this up personally. But that's what I'd be looking for. Let it come into here, and as you break above and retest, cool. You can come get better or more levels. Let me not use the word better, but more levels if that is your wish as you're continuing to push to the upside. But this is what I'm really looking for. Let's drag this all the way over. For us to come into here. Notice how it's going to retest that bottom. So we'll see. One good trade. One really good trade.
Hey, Jay.
Hey, how are you?
Good, good. I got a question for that. When you're marking those levels up and then you go back to a smaller time frame, like you mark it up on the 1 hour, say our ATM manages on the 1 hour. So we mark it up on the 4 hour and then go to the 15 minute and take those trades to go to those levels, or do we go to the 1 hour to get our trades?
I think the biggest lesson in that, John, for me is let's go to a new pair. That'll be easier. So take your screenshot here if that's what you do. Got quite a few levels marked up, etc. so forth. So that's one trade on the table. Let's go to S&P because it's clean right now. I have no problem finding my levels on the 15-minute time frame. Like, do I want definitely a little bit bigger time frame than like the 1 minute? Yeah, I do, because these are less significant. But having said that, I don't have like I always mark it up on this. Generally speaking, I'm typically looking at the 1 hour as my kind of go-to. That's my foundation. It's my
Okay, that's what I was asking right there. Where do you do it at?
It's 1 hour, ready? But so if I'm on the 1 hour, like we just saw with US 30, and I can't get to any levels, I have to go up or down, right?
Hmm.
So for example, I'm sure I'll run into some problem on here. Here's where we're at the 1 hour time frame. Okay, I'm going to zoom in a little bit. We're breaking above the 1 hour 50 as we speak. It is a wick, so I'm going to drop our line. So this is still just analysis. It's not yet a trade. I'm going to put this as purple. There we go. I'm going to mark this up because I do think I'm going to be looking for an entry on this. I can see some of the levels that I'm looking for. I know my first one is always going to be pretty tight. It's always going to be that scalp-ish target. I'm just really looking at the body that's in the middle of this liquidity void. Cool. I can live with that one. What about beyond that? I've got a low here. I like the low based off of this body to the left. And I also like this consolidation here on the line chart. Let's take a look at what that looks like. So I see my levels. I have enough on the 1 hour, but this one moves slower. So if, for example, I'm looking and I see a straight drop, I can't even get any levels of interest. I can't see any potential areas of interest. I have to go up or down in time frame. So short answer is I'm typically looking at the 1 hour, but that doesn't mean I don't still mark up on the 15. It doesn't mean I don't still mark up on the 30, because sometimes the 30, I can see this clearly. So I can see this area that I'm looking for. ADR low, ADR high is pretty magnetic, but I like this area a lot. So now, of course, we can split that with the ADR, not the 3 week because we're too close already. But so I don't mind using the 30-minute if this is going to help me see the picture that I'm trying to see. But my go-to is 1 hour. I bounce around to clarify. That's the short answer.
Awesome. Thank you so much.
You are welcome. You are welcome. We gap down for opening. Gap down. I don't think we're coming all the way up to here. And it's incredibly unlikely, but we'll see. We will see. I'm looking pretty far back at these levels. They've been broken through, retested and broken through. So this is an area of interest. It held previous weight. Does it hold weight now? I think if we're breaking above this, we're shooting all the way up to this window. But since we need to split this zone, so let's clarify that, since John asked a really good question. Not all of these zones are relevant right now. And I know people talk about that. That's great. But let's take a moment like this, where this is a huge drop, right? Go to candles, huge drop. Well, we know that this is my little area of interest, and sorry for making you dizzy. This is my area of interest. This is a big zone in between those two. So since I have to split this, I want to find the most recent reactive area, And in this case, back to candles, we've got some reactivity. This was wicks. There's the bodies. I think there was some wicks here. Don't quote me. A little bit of wicks here. Bodies are up. Back to line chart. Line. We've got a body. Okay, and then of course it busted through and continued. This is the most available zone between here and here. So I'm not saying that this is the most active. No, this has already been broken through, right? We rejected off of it, retested, and broke through it. So this is almost an insignificant zone, but it's significant to me because I need some way, well, two reasons. A, there was reaction here. There was reaction up this zone previously. So it still holds some amount of reactive weight, right? Some amount of area of interest in my words. But secondly, because if I have to split this anyways, I can either cut it in half by percentages or cut it down by thirds or whatever I'm doing is my strategy and my go-to, right? My system. That's my option A. Or B, I can say, hey, of this zone, and I need to find that area of interest. This is the most close we can get to an area of interest. That's what I'm doing, just so you guys know. So you're marking up these zones and then dropping to the 5 or the 15 and getting the scalps in those zones? Yes, Jared. At least if I was scalping US 30 on my own, I would mark up my US 30, get my areas of interest. I know that if I come into this area and I've got a strong sense of rejection, meaning lots of wicks, like we come up into that, we might close above or below. Everyone thinks that's the answer. It's not. I'm not talking about closing above or below. I'm saying we come up into this area, might be above, might be below. This is not an exact price point, but in this area, I get a whole bunch of wicks. I get a 3 candle formation. I get a 1 minute head and shoulders, a 1 minute M formation. I've got a really good idea that we're going to get a little bounce. If we break through and retest, okay, creating that N formation or like the V formation or however all the other, there's so many, you guys, the continuations, the waves and all the other good stuff. I know, cool, I broke through and I retested at the retest of the area, not the exact price point, the area. I'd be buying it again. Cool, we buy it up, I close some, I trim some, I'm making money, I'm happy. Great, I come up in my next level. I'm looking for my strategy to give me an entry, right? And I'm looking for, hey, we just broke through another level. We got a retest. My strategy is going to give me an entry. I'm good. I'm golden, literally, over and over again. That's all I'm doing. I can scalp like an hour or two, well, usually like an hour, once or twice a week on like US 30. Oh, it's simple, very, very simple. But then it's hard not to look at some of the other pairs. You're like, oh, well, US 30, NAS, you see them all. You see one, you see them all. They're not all correlated though. So 15-minute time frame, here's where we're at. Yes, I am looking for a buy. You're actually at a better entry than if you wait till this one. Better entry. Does that answer your question, Jared? is it. So I'm going to move this over now, all the way over, saying, hey, we get the continuation beyond this point. You actually had a better point right now than you would if you wait to that line. So 2 trades on the table. US 30 pushed down a little bit, retested the current 50 and the next higher time frame 50 and is back into range. Back into range. First, take profits a little tight. It's only 80-ish, 86-ish pips. You can expand that a little bit, but still, when you get the idea. The idea is when you hit these levels, you're making 2 things are happening. At least 2 things are happening. A, you're making a decision about the current trade that you are in, meaning you're trimming it, you're applying a trailing stop, you're moving your stop loss, you're closing it and saying, hey, I'm happy with the profits I made today. You're doing something with the current trade you're in. And then secondly, if you are trying to really scale in or compound fast or be the super aggressive, super high risk person, cool, then you break these levels. Remember, they're not exact price points. Please don't look at them that way. They're just a simple way to draw up areas of interest. That's it. So we come and we get a reaction around this area. We get a retest. That means like a 1-minute reentry, for example, on the golden strategy, or a 5-minute reentry on the golden strategy. Cool. We take another entry. And since we're scaling in and out, this is perfect. We're just go make this one trade worth, 10,000 pips, even though this is not a big mover. Go make it worth a whole bunch of percent. Seems like a very nice additional form of confirmation. Additional form of confirmation, huh?
Hey, Jenny,
Hey, Woody.
got another question. Last week, when you put up that thing, you said you made 40,000 pips just when the US 30 was jumping up and down.
Mm-hmm.
You remember that?
Yep.
What made you get, like, did you scale into that and that's how you got them? Or did you wait? Did you go up and it hit your level and then you turned around and got in to go down to a sale? Or how did you get that many pips out of that area that you were trading in? Did you scale into it or did you just take a lot of?
Let's go back to US 30. I'm going to go off of the one that we have marked up just so we can actually see that zone. If I'm not mistaken, hold on. It was here. It was this.
Mm-hmm.
So I know a couple people were trying to sell, I think, at this candle, and we popped up on a level. But I took my entry, like the same place as you guys, right? That I don't know exactly which candle that was on, but I took my first entry. That was on a very small time frame. I took a second additional entry on the 15-minute time frame, if I'm not mistaken. So I had 2 entries on the first move up, right? I caught the 1-minute sell down. Okay, I think I had 3 entries on this sell down. That was on the 1 minute, and then we set up with another 1-minute sell, and I don't think I had anything else on that. And I took the 5, so the 5 did not equal very much at all. And then I know I caught a couple of entries here. I took a loss on this spot, or I took 1 loss. I don't think it was here. I think it was here. Don't quote me. I took a loss though, and then I took this part a little bit later on. So I got a ton of moves, a ton of money, a ton of pips on this in total. This section, I don't know what it moved entirely, but you're talking 1 to 3 entries, give or take, on each one of this. So this is 4,000. If you caught 50% of this, give or take, and I'm just throwing out round numbers, so figure 2,200, right? But you caught that on 3 entries, you're already at 6,000. And remember, I'm being conservative. Technically, 4,400 times 3 is what? That's 12, 13,000. So I'm being conservative when I say 6,000, okay? Because I'm cutting it in half just to be completely grounded. Same thing to the downside. That downside move is a little bit bigger, but we're not catching it from the very top. That's not possible. Whole move is worth about 4,000. Figure you catch about half of that because A, you scale out, right? Well, I scale out, not you. I'm scaling out. And B, you're taking 1 entry and entry. So figure half of that. So 3,000, 1,500 times half of 3,000 and 1,500 times 3 is what? 4,500.
45.
So watch how that plays out. You catch this again, you caught this one better, you caught more of this, for example, you caught a little bit here, you took 1 loss, okay? You caught some here, here, and then here. This whole package, I don't know exactly how many entries in total I had. I know I had 2 or 3 here. I think I had 2 on the sell or vice versa. Then 2 or 3 here, took 1 loss somewhere in here. I think it was the wick area. Don't quote me though. This was not very much. I didn't have multiple entries. This I had 2 entries in, but did not equal very much because how the percentages work. So let's see, percentages wise, if this is a smaller, if my account is X amount at this point, my lot size is a little bit different than it is when I take an entry here, because this is a big time frame. There's a lot going on in the 1 minute, by the way. This is a really bird's eye view, just to give you guys an idea. But the lot size on my second entry was bigger, and that kind of costed a little bit in terms of here, and then I caught most of this with a couple of entries down. So it's a lot of pips. Sorry for making you dizzy. This whole move down is what, 7,000, figure even the first part's only 5,600. Either way you catch, that's a lot of pips. This is an insane amount of pips, you guys, over and over again. In US 30 about to retrace now because I'm in profit on buy. First target hit. Good job. Good job, Swazi. But just so you know, I'm going to drop a line so we can go see this. Well, we could pull up the recording too to see it. But I'm going to drop this line and I'm going to see. I don't know if I have enough history, so I'm going to go down to the 5 minute. Don't quote me if I have enough history on this or not. Let's see. We should. No, we do not have enough history on that. Not even close to enough history. That's ridiculous. Ridiculous. There it is. So 15 minute is 3 times, well, 15 times as high as the time frame that I was looking at, right? 15 times as high as the time frame I was looking at, just to give you an idea. But there's a lot happening. So even only going off of the 15-minute time frame, just that's not very much. We caught from a very lower part, we caught all of this move. And plus it moved an extra like 2,000 from where that last target was. Don't quote me again, I'm not sure, because we were just calling this as a scalp. I know everyone was taking different entries, but I caught this one down. So figure from the lower end, this is the trade that in the books we have 3,000 for. So this is over 3,000 pips on that first one with multiple entries, huge. And that's from where we actually got in, not hypothetically. So not cutting it in half to be conservative. 3, times 3, that's already, you're already at 9,000. You're already at 25% of that. Same thing
And
here.
you're taking your entries on the golden strategy when it comes off the MACD and it gives you the arrows.
So remember, the golden strategy is my strategy, right?
Right.
So if
right.
we get super naked, and that's not to be ownership or anything along those lines, let's just get super naked for a second. I'm pretty sure I have it. Naked. Nothing on here. No noise, no nothing. Keep in mind, I would definitely have the higher time frame, or the bigger, I should say, MACD on here. No noise, no confusion, no problem, no pain. Okay, here's where we're at. The fractals, we don't even need those, but I like the fractals. They don't distract me, but they do distract. They sometimes distract me. That's a fib. Let me fix my mouth. Hold on. Delete. So we've got the simple and the exponential. I am always using exponential. When we tested this, it actually tests better, but this was years ago. This was, gosh, 4, 5, 6 years ago. The simple was a little bit better, but that's so many years ago, I don't even care anymore. I'm always using exponential, but I do have that on here just for conversation purposes. So let's take this off. If I'm on the 1 minute time frame, this is German 30. Long before you get that arrow or confirmation on this, you can see what's happening on this, right? You can see what's happening on the chart. And if I zoom in a little bit, this is the original concept. This is taking all the noise out. This is everything from your 3 and 9 crosses, which we don't even discuss anymore. We don't discuss them because too many people were getting beat up with them. We talked about this and having 2 charts open. So for example, one on the 1 minute, one on the 5, one on the 5, one on the 15. We talked about only taking trades in the same direction as the 1 hour. Long before. So I know Ricky's doing a comparable thing off of the 4 hour, but we talked about that years ago. Some people have taken multiple versions of this and having a 5 minute version and a 2 minute or 15 and 30. There's so many different ways to utilize this, but keeping it all completely naked and simple. You can see the 3 and the 9 cross is simple, right? This is the earlier situation. We don't take those on the counter trend. We don't take those against the trend, mostly because too many people were getting knocked out. But this was a good way to scalp some opposite directions, originally speaking. It's just hard to duplicate, so we let it go. 3 crosses the 50. The MACD is above the 0 line. The ADX is, I added that mostly for my own personal pleasure, but is in agreement. Cool. I'm good. I can take this way before the likeliness of getting that arrow. Probably you're going to get the arrow like here. Sometimes you're going to get it on time or early, but most of the time it's going to be lagging just by nature. So to answer your question in short, I'm taking all of those with the strategy that I know. Sometimes am I still in neutral on this thing when I take my entry? Yes, sometimes I am. But before I say that out loud, I don't want to be a bad influence. I have to acknowledge that I'm not taking it to be in advance. I'm taking it because it's my strategy and because I know what I'm doing and because I can see we've got a candle close and a 3 here. We have a lot of opinions, including my own, on where does the 3 actually cross on this part. For example, the 3 crossing the 50. It's subjective because the human eye and the digital eye are different. Oh, sorry, I'm trying to get back to it. They're different, fair and square. And what you see in real time versus a closed candle is different. But the 3 is crossing here. However, you're not, so it's different. It's not that much different, but it is a little different. I think that answers your question.
Yeah, very good. Thank you so much.
You are welcome. So my advice to you, though, would be to follow this. Learn the strategy, but follow this until you really know that strategy. And it doesn't have to just be my strategy. There's a bajillion. There's so many ways to see the market, and there's benefit and down, up and down to every side. But I would highly recommend, until you are in a great position to know what you're doing, is I would come to the chart. I would look for my arrow. Okay. When I get my arrow, let's go to this one. We know that what this one does. Let's go here. Especially if you've already got some kind of markup, right? You can say, hey, do I have enough room to my next area of interest? Is this a good? Well, first things first, you get your arrow. First, you're checking to see, is your ADX good? That's obviously below, otherwise you wouldn't have the arrow. And of course, you're at the 50. Cool. So all the 3 reasons strategy-wise are good. They already passed the sniff test. Now you're looking for 3 other reasons. Those 3 other reasons are really simple. They're just, if I take this right now, where is it most likely to stop to the first stopping point? So like your first target, is there enough room, if you're wrong, to have got your pips and get out? That's your first question you're asking yourself. So in this case, you're kind of sitting, I don't know why it's doing that, y'all. Sorry. You're kind of sitting at that next higher time frame, 50. That would be a little bit to me, but we're already sitting on that, so I'm not counting that as structure. We're already breaking through it. So my next level is here. It's 130, 140-ish pips, right? That's the next area I'd be looking to turn around. I would pay attention to this baby gap. I would find it significant. 800 pips. I'm going to get some kind of reaction around 800 pips. Some kind of reaction around 100 and... No, that's 1600 pips. Some kind of reaction around 800 pips to 1600 pips. Cool. Now I know. If I'm managing on this time frame, my stop loss is above structure. This is 1500 plus I'm giving it room. So am I getting at least a reasonable risk to reward? That's my second question. And the reason why that's important is because sometimes you catch this move that has this huge spring. And if you take it here, you might have room. But if this huge spring or huge candle is huge, it's too big of a risk. It's too big of an ask for what you could possibly gain. So that's my next question. Is there room for where I'm going? First question. What is my risk to reward? Next question. And I don't know why I cannot think of my last one. There's 3 things, 3 consideration points. And I think the third one is the levels, but I'd have to go back to my notes because my brain is like, I don't remember. 3 indicator rules and 3 consideration points. That's it. That's all you're doing.
Thank you, Jenny.
You are welcome. Swazi in the chat said, should I wait for a retest on US 30 and then buy scalp again? Which are the area of interest on the buy up on 15? Which are the areas of interest on the buy up for 15 minutes or 5 minutes? Let's go back to US 30. So S&P is moving very slowly. US 30 is moving. I was like, wait a minute, how am I not in that trade? I went off to a different pair. So you should be up. I'm up 500-ish pips, right? You definitely should be up from where we're at. My entry's a little bit different, just to kind of give you guys an idea. But not intentionally. It's just time and lag and price points. That's it. So this is where we're at. Can you expect some kind of a bounce retracement? You can. But if you're in this, you have to decide what kind of trader you want to be. Swazi, if you want to get your 300, 500, 1,000 pips and be done for the day, you have every right to do that. If that matches your psyche better, you totally should do that. If on the other hand, you want to say, hey, look, I'm in this trade. I see the upside potential. Let's not even go to the 1 hour. Let's just go to the 30-minute. I see the big picture. So we've got a nice little baby head and shoulders. Again, we're breaking out of this area. Cool. I see this big picture. I want to get paid for this big picture, right? You can say, I'm going to trim some of my position and let the rest run. Okay. You have that option too. I can't make that decision. One thing I try not to do is manually close a winning trade out of fear. So I'll trim some. That's how I control my emotions and my psyche, is I'll trim some and let the rest run. That gives me the peace I need. But I don't know about you. I can just speak for myself. But when I'm winning and I know that this has got, let's just go off of the small side. Let's go middle of that zone, 2,400-ish pips more room. And I close it. And let's say it takes off before I get a re-entry or something happens. I'm more irritated having missed out on what I was right on than I am when I lose. Personally, that's how my brain works, because that feels like it was rightfully mine. That feels like that's mine, and it should have been mine if I could have just controlled myself better, if I could have just been on it better. Swazi, the original way I trimmed positions was pretty janky. I didn't know any better. I didn't know what I was doing. So I would take, for example, and this was not on indices, by the way, I would take multiple positions and then it would take me several minutes, but I would apply different trailing stops to each of those positions. I would have different take profits on each of those positions and then the same stop loss. The last position had no take profit. And that's how I kind of did my percentage. And that's literally what I did as a trader. Since then, and a lot of the ideas and things that from this group, there's a gentleman who created an ATM that is all about that. So we got a manager now that trims some of it. Same with ideas that I was using all those years ago. And of course, my ideas and lots of other people's ideas, so many cool ways to manage, not just those. So my first advice would be use something like the ATM personally to scale out, because it's automatic. And then you're taking the you part out, the part where you mess up and you make mistakes and you're superhuman. That would be my first choice, is to use something like an ATM or an automatic trade manager to scale out. But if that's not in your capacity at this moment, yes, you can take more than one position, and it's difficult, but you're going to learn a lot about yourself in the process. You can set different take profits. You can set different trails. You can manage them in that way, that prior to seeing whether this wins or loses, prior to knowing whether it's a good or bad trade, you have made your decision on how you're going to manage it before this happens. That's the key, though. And then actually letting that play out when it does, that's hard. It's very difficult when you're right, and it's very difficult when you're wrong. It takes discipline. Lots and lots. I think that answers your question, though, yeah? All right, awesome. Okay, those are the two trades. Could we keep looking? Where's my gold? I can't believe that pair. Yes, we could. Unbelievable. How rude. We're still pushing down. I'm not in love with chasing this trade. So do I want it? I do. We don't have any reason. So I've been clicking on and off of it off screen. Here's where we're at. We're still going nowhere. So since we're going nowhere, I'm not going nowhere with it. I'm going to sit still. That's my decision. But I am interested. It just not available at the time. So does anybody have any questions, comments? John, I think there was something that you wanted to talk about. I forget exactly what, but this is your moment. Elliot, how are you? Well, you unmuted yourself. Elliot, can you hear me? Okay, other than Elliot, does anybody have any comments, questions, or pairs that you guys want to look at? Today is Thursday. We have quite a few pips on the table, quite a lot of amazing, incredible things happening. Hey, Jonathan, how are you?
Good. I just wanted to get your perspective on something. I think we may have talked about it before, but since nobody has any questions, I'll go ahead and bring it up. So since you were talking about the management and allowing the EAs or some sort of form of management to have your take profits taken in and out. What about, let's say, if you're doing something a little bit like out of the box, like let's say, for example, you take 2 entries, right? And those 2 entries, even though it hasn't hit the point to where maybe your EA may manage it and get you out of the trade, but the percentage on your account, let's say if you were compounding a small account, let's say you reached 10, 20%, and you feel that you're coming to a point of structure. Um, Typically on that, sometimes I may make a decision that's a little bit out of, what my regular management would be. And I'll say, hey, I'm fine with this profit. I'm going to go ahead and close it. Maybe look for an entry later if it does pull back and get in. How do you feel about those things and the longevity or, those isolated situations on your account, Jenny?
That's a good question. Like that's a deep. First off, I love your questions. I love the conversation that you bring to the table. First things first, I think everybody on here is smart enough to agree that you can't go broke taking profit. We've all heard it before. So I have to lead with that just because money in your account is still better than at risk in the market, period. Like no way around it. I support that 100%, and particularly with a small account, particularly because 90 some odd percent of traders fail. Like I forget the statistic, but we had talked about it a little while ago. It was 90, more than 90. I'm being generous. Like 98% of the people in the market at any given time are beginners, something along that line. And 90% of the people who are ever in the market at any given time they fail and they quit. So when you take those numbers into account, I super support you can't go broke taking profit, and I super support that there's your money is still better off the table and off the risk and in your account. But getting past the support and the love, my question to you is how do you duplicate that? So let's say you have a killer week and you do 20% 4 days and you do 60% one day. You have a killer week. Well, your brain made all kinds of decisions. Your emotions made all kinds of decisions. You had a discussion with your 15-year-old who had a tude one day. You had good things and bad things. Maybe you're on what is that book? Oh, I was talking to my daughter about it. I always get it wrong. Turtles All the Way Down, I think, right? But it's a good book, and it's about negative thought spirals and that whole nine. But let's say this is your up spiral week, and it's amazing. How do you duplicate that next week? That's my only question to you is how do you measure, right? How do you measure the thought process you had with any sense of accuracy to be able to do it again next week?
That's a good question. That's sort of a difficult one. And to be honest, to answer your question directly, depending on how much experience you have, how much emotional control that you have, that's a very tough thing to duplicate. And the majority percentage of traders probably won't be able to do that. Maybe you'll eventually get to that as you get a little bit more seasoned and confident, and that's, I guess, part of where it becomes more of your regular, duplication, and it's like second nature to you. But if it's just like a willy nilly, type of thing that you're doing occasionally, that's very difficult to duplicate. I would agree with you there.
That's what I'm saying. And I'm open for anybody else who has some feedback on this. I think it's a great discussion. That's my only qualm is how. Go ahead, John.
I don't think it is duplicatable because what you're talking about is the past and what you did the last 5 days, and we had a great week, whatever. You can't have those days again because those days are gone. You can keep certain aspects of it, such as your attitude. Positive attitudes are always awesome, better than anybody. With a negative attitude, it always wins. But you can't look at it as saying, I'm going to do the exact same I did last week, because it's like me and trucking. I'm an owner-operator truck driver. I've had weeks where I've grossed $23,000 in a week. I've had weeks that I've run all week and I lost money. I mean, and it doesn't matter what my truck does or what I think. It's what all these other the road, the traffic, the guys who loaded me, what kind of load did I get? That's all the stuff that matters. But just because I had a great week, like you said, this past week, and you want to be able to duplicate it next week, I think it's more attitude and practicing what you preach. Like what you said, your managing skills. And like I said, Scott, absolutely love the ATM. That thing has saved my butt just because of the stop loss that it'll put in there that I never even messed with, because I don't give a damn about stop loss. I want to make money. but it did. It has saved my butt. I mean, I've turned $5,000 into almost $17,000. I had 4 losing trades yesterday, and all of them hit my stop loss, and I still got $15,000 in the account, only because of Scott's ATM. But anyway, I just don't think you can. I don't think you can duplicate it.
Well,
That's
don't
a- that's
forget
a-
Jenny's calls.
Don't.
And Jenny's called, yes.
That's a testimony. Hey, Scott, we can take that testimony like right there. That's the excitement. Put that on the website. That right there. I'll see if we can have somebody take that section after the video, because that's awesome. That's awesome, John. I'm so happy to hear that.
Oh, I'll
I
write
do
something
wanna-
good on it. I need to go back to his website and write a review on there.
Yes, please.
Hey, so
Um,
what do you got on that topic, Scott?
Well, I want to push back on one thing. And that is where you led with, and that's that you can never go broke taking profit. Because the problem is, if you hang on tooth and nail for your big stop loss, but you trim your profits off before you ever pay for your stop losses, you'll go broke.
Very true. Very true.
There's a trader that has something similar to what Scott has. I believe Scott's management is I prefer what he has, his EAs and everything that he has set up, because it's less manual work. But it's the I know people have seen on I guess on the internet the what is it, Magic Keys, and the person who actually created that, they typically, that's sort of their style. They look for a certain amount, and then they're pretty much out, after they've reached a certain type of profit. And then they're only trading, like, of course, that 1% to 2% or whatever. And then the trades that, ride, that have a lot of momentum and volume, then sometimes they can get a lot more than that. But then again, that goes back to what you're saying, Jenny, is that it's to the person, there's a duplicatability. So a person knows, okay, I'm looking at this particular point of structure. I'm going to close half of my, percentage of my trade at this point, and then I'm going to let the rest ride, or I'm just going to close it out completely because, I've reached a certain percentage for the target for the day or whatnot. I'm good with that.
The
So
other
that's
thing that he does is he trims out of losers.
yes.
He'll
Very
close
true.
half his trade if a smaller time frame candle closes bearish. If he's in a buy, he will close out half of his trade. His goal is to never take the full loss.
See, that right there adds a whole piece to the equation. So let's work it all the way backwards. Yes, I maintain that because of the loss ratio and the accuracy of people who actually trade, and so many of them fail, I have to be supportive of, I'd rather you take something than nothing. But the whole concept of, what Scott brought up is the whole point. And that, I think, is where when people come to my calls, they really want to do well, but I think that's where they're getting the most beat up. If pick some lanes kind of concept, we can't in any measure of the way say, hey, look, we're going to hold. I'm going to hold this trade. I'm going to trust this trade. I'm going to trust it against all the other narratives. And that's hard to do individually, and better yet, as a community. But I can't possibly, or you can't, any of us, say, I'm going to hold the whole stop loss. And then, oh, I'm very happy I got $100. Oh, I'm happy. I hope you guys can see my twitching, mouse, because people do it all the time. I held this, and this was going to cost me $1,000 of a loss. But oh my gosh, I got so happy. I don't know what's going to happen. So I closed it all. And then you take a basket of 100 trades, okay? 100 trades, and you closed too many of them at 100, but you took even 20%, even if you still had an 80% accuracy. If your losses are 5 times as big, what is that? I guess that's 10 times as big, as your gains. 80% accuracy means nothing, zero, like seriously, nothing. But what the guy that you and Scott are talking about is doing is trimming out of his losses as much. That's going to level that playing field. Again, it comes into that equilibrium a little bit. That would change it, obviously, all the way around. Because now he's scaling out of winners, sure, but he's scaling down on maybe losers, right?
Right, exactly. He manages the losers very short as well, not taking a big hit or whatnot. But the other thing too is that that goes into account of that is that and the individual to make those type of decisions is that we were talking about, certain traders are at certain levels where they have a very good understanding of price action, what they're looking for, the period that they're trading. And then that's where you can make those, that's where you can sort of make those, second nature adjustments while in a trade, as opposed to, having, a form of management and then sticking to, your entry and, your exit points, etc. Because that's a little bit easier to duplicate, especially depending on where you are as a trader. You know what I mean?
Well, so I agree, but Jonathan, so I'm a pretty avid information gatherer, right? I will say it that way, between all the different things that I try my best to digest. Of all the things that I have learned, and I still have yet to find any thought leader or guru who would say that any of us, I mean, for the most part, have the capacity to long term be that systematic in unmeasured things, okay? That we have even the capacity to autopilot things that have such an emotional and life impact. The idea that we're ever going to get to the point where so back to the question I had asked you is, okay, how do you duplicate it next week? The idea that, sure, there's 1% of us, I mean, I'll dare say 3%, who have the capacity to next week make the same mental and emotional decisions despite the upward or downward, things going on in their life, or despite whether they're, winning or losing. Sure, 1 or 3% of us have that capacity, but without some system, some metric, some measurement, and that's again where the ATM or any kind of automated or defined rule process comes into play. Most of us don't. And that's so my personal opinion, like, to kind of final it through, would be no. Is I wouldn't suggest it, mostly because I don't think whether or not you made $100,000 this week or lost $100,000 this week, you can duplicate the success or avoid the loss if you don't have that written. Here's why I exit. If this happens, then I exit. Now, if it's part of the rules and part of the, whether it's automatic, such as ATM, or part of your trading plan, such as your written, if this, then that statement, then by all means you do you. But if it's not measurable and not something you can track and define and duplicate, to me, my answer would be a hard no. Is kind of how I would say that.
Just to sort of wing it back in too, though, is that part of my original, and I may have not articulated it clear enough, was taking a profit, because I strongly believe your exit strategy should pretty much be sort of systematic. At least you know where you're getting out or what amount that you're willing to lose before you even take on the actual trade. But again, as far as reaching a certain percentage, even though your profit 1 or 2 may have not taken, but you felt that you got a good percentage, are you still a no on that? Like, as far as if you are in the positive, and assuming you're not going to enter into another trade that is not meet all your metrics before you actually enter it, if should another trade present itself after that, would you say yay or nay for trimming profits, and if you are in the plus?
I go back to what I said. For me, it's a no. So here's why. For example, I took a couple of, I don't remember. I have to go back. But what trades were these? Hold on, I'll tell you. I think it was S&P, US S&P. I thought I took a NAS. Nope. It was US and S&P, US 30 and S&P. I let those run. So now did I take another entry on S&P and another entry on US 30? I did. Did I get knocked out of my little scalp? These are scalp settings. These are not the same as this right here. But I have the ATM for a reason. And I know we're really just honing that down, but I have no choice. I do have choices. But for me, my exit manager needs to be in control. So those are different settings. Those ones, I believe I have the wave loaded on that scalping. I'm looking at it now. Hold on those scalping. So I've got the Donchian channel for a stop loss. So it's using a little bit tighter of a stop loss than necessarily fractals. I've got the super trend, which I really like, a whole bunch. I wish I could change a couple of little things there, but I've got the super trend, which I really like. And then I've got some EMA kind of trail and exit. That's how I've got
And
it.
by the way, that is officially released now. So
what version is it?
it's 2.06 for the expert, 2.03 for the for the settings. And it's not a release candidate. There are bug fixes that went in since you did it. So you should definitely update, Jenny.
Thank you, because I have a release candidate up. So I will update that. Thank you for the heads up. But yeah, for me, Jonathan, I'm gonna have to say no, because the more well, for many reasons. Again, I just went over the whole concept of the idea that we have the capacity on a long-term basis. We all can be superhuman for a week. We all can be great, right? And or have a bad week, but we're not measuring a week. So my first reason is I don't think we have the capacity to be duplicatable long-term. And that's the majority of the vast majority of us. There are the anomalies, number one. But number two, my train of thought, it's in the management. So it's in the time and it's in the management. The more time I feel like people are spending on the charts, the more they're losing, because there's a lot of decisions to make. And it's not just Steve Jobs who talks about it, but decision fatigue is a real thing. You come to the chart, you see a potential move on German 30, you want the money. You see that NAS is happy, but now you kind of also want German 30. Like, there's more that goes into, should I open or should I close or should I trim? Typically it's because of another reason, and that's not being brought into this conversation. So for example, let's say you were up on NAS. Are you wanting to close NAS so you can take German 30? Are you wanting to close NAS so you can be done for the trading for the day? Are you wanting to close NAS for why? Just because you're up? Is that the sole only reason? Or are there other reasons? I guess let me first ask that, and then I'll finish my point. Jonathan, that's for you. And this is he doesn't want to talk to me anymore. You see this?
I'm sorry, I was looking at something else at the moment. I'm getting close to releasing cool margin meter, and I'm still trying to work some little bugs out.
That's awesome. Jonathan, are you there?
Yeah. Just in general, I was asking, and I thank you too. I love the banter back and forth and the different side airs, etc. It helps me quite a bit. I hope it brings value to anybody else in the group. I'll give an example. Like for example, sort of my feelings with US 30, and I just feel that I have a certain feel with how the pair can move at times, right? So let's talk about this trade I did that we just got. What I did is I had 2 entries on the 1 minute time frame. I take profit, as we know, was always the 4 ATR. And it got to about 2, right? I saw the big wick and, could have kept going up, but I had 2 entries and I had about a 20% gain on the account, actually like a 15% gain on the account. And I said, you know what, I'm going to go ahead and close. It was a 1 minute entry with 2 entries that I had on there. I felt there's a possible chance that this can pull back and I'll have an opportunity to get in. If not, I'm fine. It's gone away without me, but that was 2 entries that I did have. I'm good with the day, and I'll come back the next day, and then hopefully I don't have to self-manage it again, because typically that is my preference to do it. But it was just sort of a feeling, and it did retrace all the way back. And I think it still wouldn't have taken me out from my first entry. The second entry, I think I would have hit stop loss. But that was a scenario where I felt that it could come down because just the way that US 30 moves. So I did make that decision.
Okay, well now see that changes the conversation a little bit. And I too love the banter because I think it's helpful. So I think one of the other reasons why mine would be a no is because unlike you, because you've proven your discipline, you've proven your ability to walk away. My personal opinion would be, I feel like when a lot of people come to the chart and want to make a reactive decision to close or open, to close prematurely, I'm going to use that word intentionally, they're doing so because they want to take the German 30 trade. They're doing so because some chat told them that gold is going to move. They're doing so because they wanted to go a bigger lot size or something on this. They're doing so for some other reason. So I think that would also be, if it's defined in your rules and your trading plan, that especially because you and I are really good at US 30, so we really have a pretty good idea. We're going to wick up, we got some pips, we're going to wick down, we can take that amount, and then if that's all you're getting, you're good. So I can see that from both sides, especially when you say it like that. But my concern for the majority people who listen into this would be that they're doing it for another reason, for a reason of, hey, I'm gonna now go take gold, or hey, I'm gonna go do this, hey, and that would be poor choices for me.
And in that sense, Jenny, this is Michelle. How you doing today? It goes back to me talking about not being profitable, not being consistent. And it goes to, it has to be a plan, inside out. And I don't think you have to deviate, because sometimes, just prime example, you go to a job, they say A, B, C, D, this is how you do it. Yeah, you can find loopholes to probably make it shorter, but the majority, you still got to stick to the plan to get to the answer. And I feel like if I came straight into trading and I had got you from day one and say, this is the plan, this is what you do, follow it, don't deviate from it, I think it would have been easy on me because I'm more on a structural basis. But coming in, learning on your own, trying to figure out, your mindset is already stated, okay, I got to do this, I got to do this. And then to switch your mindset to just, it's hard. And like you said, if you have a plan, it adds up with your plan and your rules and your regulations, everything. It should 9 times out of 10 be successful. But like Jonathan, the emotional part is the hardest part, what I see trying to trade, because I've been doing this now going on 2 years. And I started with one person and I automatically switched over to simplicity, and then I joined on you. And that's where I haven't deviated. Yeah, I look at stuff, but I was like, nope, I'm still focusing on this, still focusing on this. I haven't been profitable, want to give up, trying to say, just throwing the towel. This is just not for you. But talking to Jonathan, hearing what you're saying, hearing what Scott say, you have to stick with your plan and you have to make it work. And you have to try it out for at least 50 trades in order to see what's up. So I just feel like hearing all of this is like, I got to go back to the beginning. Open a new demo account or just start a new account and go from there and set a plan and see how it works. Because it's like, it's frustrating. People say, oh yeah, I make this profit, I'm doing this, I'm doing that. And you can see that it's able to be done, but I'm not getting it from me. So, but it is what it is. And that's, I think, like I said, it's a me thing, literally a me thing. So I need to get out of me and get into Jenny. Like, okay, this is Jenny. This is what she say. This is what she say to do. Follow your plans, make it work for you, and see what happens. So
yeah, I love that, Michelle. Thank you for stepping up. That just to sort of give you some insight, and that's really good that you're on there and that you've been here 2 years and you sort of stuck with it, because a lot of people in Forex, part of the biggest reason why there's such a mass majority of those who fail is a lot of people don't have the fortitude, I guess the grit to tough it out during the ups and downs. Everybody has their course, and it's, with all these gurus and things of that nature, people always like to, compare themselves and try to say that I should be at this point and whatnot, as opposed to being focused on their own journey. And typically a lot of people, most of the people who have made it successfully, even when doing one strategy, is in that 2 year, 3 year, 4 year gap before it really, really clicks. Sometimes, it takes people even 2 years just to, understand, what their strategy is or create their physical strategy. Then it takes another year to actually execute it, as flawlessly as, they can possibly do. And then, even when you do that, then you have been winning, you're still going to go with, you're going to have those times where you have slumps or losing streaks and all of that. And it's sort of just sticking to the plan, or like you said, going back to the drawing board and rebuilding yourself up. Because one good quote that I've heard with Forex is that, Forex breaks you down as a person and builds you back up. And once you're built back up, that's, where you blossom and you start to see some of the fruits of your labor. But the only people who don't make it are the ones who quit, and also the ones who don't try something, long enough. You know what I mean? So that's really good that you've recognized that, and you're working on that, and eventually you get there. You just gotta, keep doing what you're doing.
You said that really well.
The thing about it too, just 2 seconds ago, I get a phone call. Hey, I said, I'm on trading. Oh, just hang it up. You ain't gonna make no money. You know, just the constant negative feedback of everybody that gives you with Forex. And I want to prove them wrong. And I think that's my main objective, prove everybody wrong.
Hey, listen, whoever called you and said that, don't take their calls no more. Just an idea. Sorry.
Yeah, but it's your mother. Yeah.
A lot of people, because even my kids be like, oh yeah, Mom, you always talking about Forex. You always talking about Forex. I was like, okay, keep on doubting me. But when I succeed and y'all reap the fruits of my benefits, then I want to see what you say. So it's just a whole lot of negativity around me. And even the people that put me onto it, that started, they're not even doing it no more. I mean, they were with IML, but they quit, but they're not even doing it no more. And I'm like, y'all told me money, money, money. And y'all not doing it. Y'all went back to working a 9 to 5.
Okay, so
And
tonight when you go to
Rika
bed-
just said what I thought, what I wanted to say, but she said it better. Sometimes we have to move in silence.
that.
You're right. You're right. I mean, I don't really say it anymore, but I'm just like, okay, go ahead. Think what y'all want to think. I just pay them no mind.
Listen, when
Hey,
you go to bed tonight, you gotta just do me one favor. As you lay your head down, okay, you trust God, trust the universe that it's handling anything that's on your plate, right? And that's just a sense of peace. But remind yourself what a complete baddie you are, because while everyone else in your community quit and was a naysayer, you stuck with it. So whether or not you have the dollars in your bank account or not yet, you have already proven that you have more skill, more tenacity, more grit, more oomph, and more bajillion other words I can't think of right now. You've already proven that you are above that mentally and emotionally. You've proven yourself to be out of a different caliber and a different level because you're still here. So that alone, it might not be the dollars and it might not be the Maserati. I get it. But you've already leveled your life up and your mentality and your emotions. Even if that's all you've accomplished, you've already proven you are a step ahead, that you're a cut above. So remind yourself of that when you go to bed. Deal?
Hey,
Deal.
Michelle.
Yes.
Michelle, you're telling my story. I've got 5.5 years into this stuff, less $25,000-$30,000. You know, I mean, I'm in the negative that much. I've been doing this for a long time. My wife says that, oh, it's just a scam. My kids tell me the same thing. Everybody but one friend that I've got that's in Forex tells me, just says this is a scam. Well, I know people that do it. I've been in IML. I remember Chris. I remember a bunch of guys. And I've been through all those just with you. But aren't you happy we found this lady right here?
That's
because this is, I've been through not all of them. I've been through a ton of them that are out there, and everybody here will probably know the names that I would say. But none of them do this. None of them trade live in front of you, and it works. 91% success rate, darling. When you don't need, when somebody's telling you negative and you're feeling bad, you call me, you message me. I'll give you my phone number anytime you want to talk. I'll promise you, I won't give you any negativity. I'll tell you how to shut that kind of noise out. It's easily done. It's a practice thing, but I'll show you how to do it. We'll fill those negative things up with what I say, what Jenny says, what Jonathan says, Scott, all the people in here. You come talk to us. Don't talk to people that don't know.
Amen, brother.
I received that.
And my daddy called it pit bull tendencies. That you have. That's what you got. You got pit bull tendencies. You get the bone, you don't let that bone go. You know that bone's gonna nourish you and it's gonna be what it is. You know what that bone is. Don't let that bone go, girl. And if you drop it, hell, I'll hand it to you. I'll pick it back up. If you get mad and want to quit, but then call me.
Nah, I ain't quitting because this is my only way I see out. I don't see getting another job. This is my only way out, and that's my mental. This is my only way out. And
you and me both.
Only way out. No other. I don't see no other way. I only see this way. So
I love you guys so much.
That's how a lot of people who overcome in this industry, or anything that they're doing for that matter, any of the entrepreneurs and all of that. I mean, entrepreneur, if you look at it, and being in that top 1% or whatever financially stable is a difficult thing to do. A lot of times too, and just to sort of give a little fairness to to family members or whatnot. Sometimes, people do say stuff, and you do have haters, that people who are just, typically hating because, they don't have the confidence in themselves to put everything on the line, do something that there is no, guarantee, because a paycheck is a guarantee. Once you sign in, you know what you're going to get paid for that hour and your time. And then you go home and you go about your day. Entrepreneurship is a whole different animal because it's you put in and you go in with the faith that, it will eventually work out. And you're going to take a lot of lumps on the way towards, striving for your main goals of success. But then also too, in retrospect for family members too, is sometimes because they don't understand, or two, because they are worried about you, and because they don't have that understanding, that, their guards come up and they say, hey, this might be a scam, because they're fearful and they place their fear on you. But again, if you just see the bigger picture and you stay with like minds, forums like this, which is why this class is so important, and coming in on a regular basis for a craft that requires you being on the charts by yourself the majority of the time. I mean, that's sort of the perspective that you have to keep in mind with all of these things, and that can sort of help you too. If you just look at it like, they may be they're worried, for me, and they just don't know. And, they may not have the fortitude that I have to put everything on the line. And that's how you have to look at it. So, you don't take it as a negative. You just that, they don't understand.
That.
And can I add something in there too? So, Michelle, I love that you just shared. John, I'm Team John now too. You got a fan now. And I'm not a person that just will say stuff just to make people feel fluffy. Like I can tell your heart behind the words you said. But Michelle, one of the things too, I feel like you're going to change generations, and I feel like, that's why you've been getting so much pushback and stuff like that. So just keep going and just know that when you do it, you're going to be changing the lives of other people because they haven't seen it done before. They only know what they know. And it's almost like somebody I know, when they got a house, then other people in their family was inspired to get a house, or they started traveling, and then other people started traveling. So people can't go where they haven't seen and they haven't been exposed. And like everybody on the group has been saying earlier, the fact that you have stuck with it, that shows that you have what it takes. And when you get it, you are going to be so phenomenal because you had to work for it, and you're going to appreciate it. You know what I mean? But also you're going to know that nothing can take you out because this didn't take you out. So I'm just excited for your journey. I have been there before, and I'm excited for everyone who's keeping going, and you guys are amazing.
I love that. I love you guys. Honestly, that community, John, your words to her, Barika, Jonathan, oh my goodness, that's the community. That's my dream right there. To build a community of people who lift each other up. And Jonathan was very open-hearted and mindful of that. Yes, our family wants the best of us. And sometimes, like Barika said, they just don't have the eyes to see. And that's okay. But sometimes we got to see the things that other people can't see. And that's not easy. Like that, what it was, the woman quote, the woman king quote. I love that at the end of the day. They see the job, but we've been sold that story. Like that story doesn't have to be your reality. You want living proof of that? I am living proof. Barika said you can't go where you don't know. I didn't know any of that stuff. Every place I've been, I was one of the first. It was a different planet. But you have to see it for yourself before anybody else can see it. And you've already proven that you've got the hardest part on lock. You've already done it. And that's amazing. That is absolutely amazing.
Yeah, and even with schooling, it took me literally 14 years to get a bachelor's. I mean, I had kids, I finished, and that's just who I am. I'm good at trying to stick to whatever, and I'm good at trying to push whomever to do whatever. But I like to tell people when I know something, I know something. And this is the fact that I need to tell them. I know something that would change y'all forever. And that's where I'm trying to go. I'm eventually going to get to show them this will change your life and your kid's life and your kid's life forever. Because the way I'm seeing things now, and the neighborhood I live in, like in New York, people getting robbed left and right. Times is hard. People trying to break in people's houses, because they don't have a job. Eggs is $8, milk is $5, bread is $5, and you're not getting no raise. Just like my job, you didn't get no raise, you didn't get no bonus this year. Really? Who wants to live like that? So you're going to be stagnant for the next 5-6 years or 3 years that you're at a job? Who wants to live like that? And things aren't getting cheaper, they're getting more expensive.
They are.
So
I'll never
Michelle?
understand the people who call it everything a scam. Like Wall Street exists, like the stock market exists. That's not a scam. Your ability, your skill set is what it is, but it's not. It can't be a scam. It like this is the real world. It's not a scam. So
Now,
go ahead,
that's
Scott.
sour grapes attitude, you know,
I know.
it's, they don't want to pursue it. So therefore, everything that they don't want to, put themselves out for is a scam, or it's, you know, it's a fool's errand, whatever it might be. You know, it's a way of justifying to themselves that they're not taking chances. But Michelle, you have the kind of grit that will make you successful once you start to see it.
Amen to that.
Thank you.
Amen. Hey guys, I marked up nows because I couldn't not. We're moving to the downside a little bit as we speak. So I don't have an active trade on this just yet, but still, I think this is not a bad thing to look at. Big picture stuff. So can we scalp that down on the 1 minute? Sure, we can. Can you make a couple of pips? Sure. If you're going to manage it automatically, like on the 1 minute, or really tight, like manually, you've got what it takes. But you've got your little vectoring, you've got your impulse. We've yet to really come up to really retest this low enough. I mean, we came close. I mean, granted, we came close. Close. Well, yeah, right into that wick zone, if you will. I think we have a little bit more room. So we'll see. This is not an active trade yet, just an idea. Until it activates, we'll have to see. I don't know how much longer we're going to be on here. But I loved the conversation. Rogerio, I think I said that right. Maybe. I'm glad that we got a chance to renew your spirits. John and Jonathan and everyone gets all the credit for that. That's the community that I dream of. The community of I've got you. When you can't see, I can be your eyes. I can be the light. Like I can lead. I can help you find your way out of the darkness, kind of like build something in a different community. So that was beautiful. I could not have asked for more. Rika said money never disappears, it just changes hands. Amen to that. That is a good one. But does anybody have any other questions, comments, all that good jazz? We're coming into the weekend. This is still booming down.
Jenny,
Yes, sir.
I finally figured out how to get my mic back on. I definitely need your eyes. I just, came back into the room. This is like my second week. And I've studied all the materials on the golden strategy, and it's just, I don't have my head around it yet. And I'm wondering maybe if could you just go over the US 30 trade that we just took? Like I'm using the 15-minute and the 5-minute to execute the trades. And I was waiting for the 15-minute to do a direction. And then I went down to the 5 and I would enter on a cross. Is that right?
I don't think you're wrong. So first things first, on these calls, I still use my golden strategy for entries. I'm still looking at the different time frames. I have to address on these calls, I'm looking for trades that are good for about 48 hours to 5 days. I'm looking at the big picture analysis. Most of the time, I'm usually referring to the 1 hour, but the overall market direction, right? The highest.
So you're getting that from the 1 hour.
I'm looking at the 1 hour for my analysis. If I can't find my areas of interest there, I will bounce around, 4 hour or 30-minute or what have you. But my area of interest and what I'm looking to see happen, I'm always looking at the bigger picture. That's the first thing to take away. The second thing to take away is I'm also looking for the most manageable risk to reward. And sometimes, like, even if I can see it, I can't take it as a group in this 2-3 hour window on time with a good risk to reward. So that's another huge determining factor for the trades that you see me go over live is, for example, sometimes I can see this happening, but I can't take it to, like, for example, on Tuesday, we really wanted the sells on US 30. I wanted the sells, but there was no good way to take it. They moved a couple thousand more pips, would have been great, but the risk to reward wasn't good and it wasn't the right time to be chasing that sell. So that's the second takeaway. Now, third, I am doing my best to still try to incorporate the golden strategy in terms of entries and just looking for that confirmation on the smaller time frame. But that's always in relation to the analysis and the best risk to reward. So
You know, Jenny, correct me if I'm wrong, but you do your analysis based on price action, not on golden strategy. Then you look for golden strategy entries that support your analysis.
well, yeah, analysis is never based off of any strategy, in my opinion. Analysis is always based off of price action, support, resistance, what I call areas of interest, right? Price, your analysis is always looking at the big picture. I don't think any strategy should be used for quote unquote analysis, even the Ichimoku for, I think I have it up. No, I don't. Even the Ichimoku doesn't make for a good, hey, I'm gonna go check this out and look at the analysis. It's not an analysis, that's a strategy, that's an indicator. So yes, I'm always looking at price action. I'm looking at candle formations, area of interest. I'm looking at previous support and resistance, supply, demand, candle formations, as well as patterns. Those are all, it's a huge basket of stuff. I'm looking at Elliott waves, not as much, quarter points, a little bit. But I'm looking at the basket. The basket of my accumulative knowledge is where I'm getting that analysis. And how I define that to break that down is really just my area of interest. And we made a video on that. I know that we have that published or coming to be published and released on the YouTube that really defines that and breaks it down. As soon as that's done being released, and here in the next couple of weeks, I'm going to go over really in depth the golden strategy. So back to you,
Good.
Elliot. Trying to understand the golden strategy. Let's go take a look. This is the 5 minute. Remember, go ahead.
No, I was just going to say, yeah, I just wanted to get your chart up.
Okay. So first things first, if you guys haven't noticed, I try to avoid opening bell, believe it or not. So if I could start the call like at 8:30, for example, I would take one call, do some introduction, some discussion, then take another, set of trades kind of concept. I've considered that it's just not conducive to my lifestyle because I value being a mother, right? So with that in mind, opening bell has a tendency to wick around. We already know that. So can you go catch some pips? Like if I didn't have to worry about the time it takes, which doesn't seem like long, but the time it takes to drop a line, change the color, move it, manipulate it, blah, 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 and talk, that's all time consuming, especially when you're trying to deal with like the microsecond. Figure everything you see already has a so many second delay, right? So if you're seeing this in this time, even if I literally drag my mouse up here to hit sell or buy, there's time in that. This is only 60 seconds. Okay. So by the time your eyes see it, even if you're Flash himself or herself, whatever, this is time. You're already halfway through that candle, if not more, just in lag and time for execution. So the practicality of kind of coming and acting as if and acting upon immediately doesn't always track as well. So to sum up that part, on these calls, I'm doing my college try best to give you guys really good trade analysis in relation to smaller time frame golden ticket entries that have the capacity to pay out for 48 hours to 5 days, right? That's how long in between our classes, and have the best risk to reward. And we've proven that we've got a pretty good track record of doing that. So now to break down the golden strategy, I love this. This tool is amazing and it's incredibly beneficial, period, across the board. It does lag. Every indicator lags, even EMAs lag. Everything lags by nature. But if you really want to understand the golden strategy itself, I would probably create a template that has no custom tools on it, none at all. And I would just get comfortable with this, just this. You can go ahead and drop the standard MACD on this if you'd like to, but to keep it simple, you can keep it off. I do think it has a value, but if you noticed, as time has went on, we've limited some of the redundant things or the unnecessary things. So to break down the golden strategy, it's very simple. You want the 3 to be crossing the 50, right? You want the ADX to be above the 2025, the momentum line, period. So if I'm looking for a sell, I need the momentum line to be above the 25, especially if I'm looking for the reversal. If I'm going with the trend, I'm not as concerned. If I'm going against it, I'm looking for the reversal or the counter trend, and this is super significant. So I want that to be big. Something to note, just for lesson style for a second, when you have momentum so high, you can always expect a pullback. So if you're entering in at a period where this is really high, you can anticipate a pullback. It doesn't have to stress you out. It's just part of the game, if you will. But rule number 1, the 3 is crossing the 50, right? Your naked eyes see it differently than the digital eyes. There's no way around that. We can bounce around until we're blue in the face, but you're doing your best to see, and I'll zoom in, The 3 crossing the 50. That's the 3 EMA and the 50 EMA right here. Cool. So gotcha. We want at least one closed bar below the 0 line on the MACD. This is all the visual stuff, the strategy itself. It's very simple. So that's really all you're looking for. We say 2, and we've defined it as 2, just because of moments like this where people anticipate, they over anticipate, right? They think that they see it, but they're not actually closed yet. So it's technically only 1. It is 1 closed level below the 0 line on MACD. Cool, got it. So now that we have that, I'm going to zoom out 1. So we're going to see it a little bit less pretty. Now I'm going to go ahead and draw my line just for conversation purposes. Oopsie. That's happening right here. Gotcha. Cool.
Mhm.
Now I know that this is where I'm at. The next thing I'm going to do is measure how big my stop loss is. I have to zoom out. Sometimes you're going to get a trade idea, but this is a pretty big ask. You're going to get a trade idea, but it was far from the 50, which would make the risk not very good. It's just not a good trade. So if this isn't in relation to a bigger time frame analysis, this would be too much to ask. Like in relation to a bigger time frame analysis, cool, I'll take the risk. But as a scalping on this time frame, it's already a hard pass just because of this. So watch. My stop loss, if it's structure based, is 420. Plus, you guys know I give some room. We already got some reaction here. We haven't yet, but we did end up getting a reaction. We know we're gonna get a reaction around here. That's 1 to 4, and that's on the risk's favor. So not a very good trade. Figure
Right.
we're gonna get a reaction here. We're gonna get a reaction here. Now, when I say reaction, it doesn't mean it has to stop, turn around, reject. I'm saying these are very high likelihood areas of interest. So my most probable case scenario right here is I don't have a really good risk reward, so not great. And that's the first question I ask. Like, so my considerations. We've got our 3 rules for entry, and then we've got 3 considerations. First, how far away is your stop loss going to have to be, and what does that equal risk to reward? Second is what is the next areas of interest where we're most likely to turn around. I've got here, here, and here. So I've got 3 levels. I can't see what this is doing in the bigger time frame. So assuming I don't have it marked up from a bigger time frame analysis, I know where those levels are. But if I'm going off of a bigger time frame analysis, I know I've got plenty more room. So I can't control that in terms of how you're doing it, but I would prefer to know the big picture. I'm only trading a couple of pairs. There's really no reason why not. But back to this, here we are. Now I have to make a decision of, okay, so if I'm entering it, oh, that's the third thing. Then the third thing is continuation. So if the next candle or couple of candles do not give us the continuation, I'm not taking this trade.
Right.
That's it. That's
Now, can you do that on the 5-minute, or
Yeah.
you just do it on the 1-minute?
You pick a time frame. I don't care what time frame you pick. You can follow.
Well, I had picked the 5-minute. The 1-minute just seemed a little too hectic for me.
Okay, 5-minute does give you some breathing room. So let's go to a not perfect situation. Here we go. There's one, right? I'm going to zoom in on this spot. So we're kind of above, we're not yet closed. So that close doesn't really, I'm talking the actual rules, not the subjectivity, the rules, the duplication of rules. So here's where we're at. We've got 1 bar above. This is it. So when this closes, this is the actual strategy. So what do we need? We need to know that MACD is, the ADX is good, and we are. Buyers in control.
Right.
The
You've
MACD
got your two bars there.
Yeah. My stop loss is good.
And the only thing that didn't happen is a continuation.
Well, wait, it does. So we can talk about that.
Oh,
So
okay.
this part is what trips people up. And not to say this is the solve all, because it's not. Like, there's still going to be areas where you get your butt handed to you. It's just part of trading. If
Sure.
you're following the good rules, it doesn't happen as often. So here's where we're at. First thing we're going to do is always, what's my stop loss going to be? Okay, I've got this level. When the level is like this, where it's kind of etchy, like, and I'm talking manual, I'm not talking automatic,
Right.
I'm going with the low. I'm not going to try to nickel and dime my stop loss. So we've got here, here, and here. They're all really close. I'm going with this level, the biggest of them.
Right.
And I'm always adding a cushion, so I know what my stop loss is. Cool. So from where I'd be entering, we've got here plus some room, 400-ish pips. Now I know this is not too big of an ask, and I can see that visually for the most part. Visually, I can tell, unless it's a huge wiki candle or a huge amount of room between the 50, otherwise I know. So really, I think to define it a little bit better than we have in the past, if where you're entering in is really far from the 50, that low or high is, really wiki, huge candles, that's probably too big of a risk. But if you're close enough, you're probably at a really good range, probably. But I digress. So rule number 1, you're checking for risk. Rule number 2, we're going to see where's our most likely turnaround points. We've got this little area, barely 71 pips. This is an exotic index, so bear with me. 71 pips, not a horrible way to be, not for this pair, but to give you an idea, it's half of an ATR on the 5-minute time frame. Then we've got 300 pips, very, very high likelihood area to get a rejection. And now since I can't see any levels beyond that, I'm going to zoom out. I'm going to pretend like I can't see that. Actually, I don't even think there are levels. Hold over there. 15. There we go. So here's where we're at. We know we are all the way up in here is 300. We also know this is a really good turnaround point on the, what is this, 30-minute time frame? And beyond that, we've got this area. So now I know, I might barely have a 1-to-1. So now I know what my risk to reward is. And back to your point of, do I get the continuation? Technically, I do get the continuation, and I get it right here. Right there. That's when I would be taking that trade. So if I zoom in, this little wick, so this is a wick zone. I'm going to move this over. This is the close of the candle. So we all can use a lot of words and yap, yap, yap all day long. But in real time, if this is where that candle closed and you were putting a pending order, for example, above this wick, right, that would activate right over here. If you're waiting for this candle to close and you're waiting for the retest, that would activate, in here. As your skill improves, you can take this entry and this entry on the 1 minute. That's actually what we originally did, was we looked at the 5 minute and then we came and got that 1 minute bounce, which would have got us in like here, just to give you an idea. It was just very complex for a lot of people to track. So we stopped with the dual screen thing. So just so you know, that's not against the strategy. In fact, it was the original strategy. So that's all you're doing. 3 considerations for indicators, 3 considerations or 3 rules for indicators, and 3 consideration points. And then you take the trade. And this one does activate. It would have activated if this is your trade idea. This would have activated. Depending on where you put that pending, it could have activated here. Then you had drawdown. Also depends on spread and other variables. Otherwise, if you were using the wick that entered here, your stop loss would be here to here, right?
Right.
Into these zones, depending on how you're marking it and how many ATR. That's 2 ATRs right in here, give or take. Give or take. That's your
Now,
trade.
does the 15-minute have to also be in the long position?
So you want to know, like, if you have to go in the same direction as the 15-minute time frame?
Exactly. I think that's what's got me confused. Do I just go to the 5 minute and then look for the setup, regardless of what of the higher time frame? I know before in the information it was the 5 minute and the 1 minute that you would look at the 5 minute and see what direction that's going, and then drop down to a lower time frame and do your take your trades from that.
Okay, so here I put on the 150. Since we're on the 5, that's pretty much the 50 on the 15-minute time frame, right? So this blue line is representing the 50 moving average on the 15-minute time frame, just so you know. Do you have to always go with that? No, but you have to know the difference. So for example, if I'm going with the bigger time frame trend, this is going to be a lot heavier trade kind of. I know I'm going with a bigger time frame, but just know that's not a bad way to be, but you're going to be wrong, potentially wrong at the beginning, potentially wrong at the end, and potentially wrong if you get like a huge pullback kind of thing. Otherwise, you're going to be right almost 100% of the time. Figure 90-some% of the time when you're following that bigger time frame trend, you're going to be right. It just comes into management. Now, for scalping purposes, this is the 5-minute time frame. This is the, let me see if I can't do that. No, I'm not going to try to do that bad math. But if even going down to the 1 minute, these are decent little baby moves. Okay, this little move to the downside. If you're trying to scalp, just scalp to the next little level. There's pips here that sometimes you miss. Not all the time, but this is a better example actually. Let's do this. Take that off. If I'm selling, I'm missing this huge buy up, right? This buy. If I'm selling, I'm only selling because I'm with the higher time frame trend. Here is a buy that trades me up to that next higher time frame. This one's ideal. This one's not. It's too big. What moved too far? But even getting in here, you're low. So you end up missing that first move. So there's not a wrong answer. And remember, if you want to go talk about the good old days, with the higher time frame trend, taking that 3 and 9 cross with the higher time frame trend is right like literally 90 some odd % of the time. And we don't even talk about that anymore. It's programmed into the MACD technically, but since not no one, but too many people aren't paying attention to it or don't know how to use it, or we're misusing it, we kind of just stopped talking about it. But you can take even the 3 and 9s and the 3 and 50 crosses. That's going to give you 1, 2 entries, right? And even we haven't talked about this actually in a hot minute, so good question. When you're going with the higher time frame trend, you got your impulse, fine, you missed this move because you're only going with that trend. Here you go, you're breaking above. You've got your first entry, right? Every 3 and 9 cross, every retest of the MACD is technically a re-entry. I designed this, so me and a couple people were looking for that most accurate setting. My whole concept was I needed to have something where if I missed the original move, I could get all the re-entries along the way. And that's the reason why we have what we have. So you've got a lot of entries here, another 3 and 9, but you also have a retest of the MACD here. So this doesn't program well into the golden ticket, but is a re-entry. This always was a re-entry. This retest of the MACD. This is a no, because we're staying below. So where's our next 3-9 cross? This right here. This right here is with the next higher time frame trend. All of these. This is, and it gets you the lowest possible entry. The strategy is designed incredibly well, like really, really well.
So the blue EMA is the next highest time frame.
Well, in this case, I just dropped it real quick just to use it for an example. So
Oh, okay.
times 3.
I guess I don't have that. That must be in the files somewhere.
This is a traditional moving average. So watch, if I go to the 1 hour time frame, and first off, we have an indicator that does it. It's in the group. It has the multi-time frame moving average, so you can just program this at whatever time frame you want. But if you don't have that, or you want to know another way, you can literally drop an actual moving average onto your chart, and then it doesn't move with you. That's the hard part. 1 times 4 is what? So 50 times 4, the 200 moving average is going to be equal to the 4 hour 50. This, see?
Mm-hmm. Yes.
It's how many lower time frames fit into the higher time frame. So that's what you multiply by your 50.
Not bad. But does that help you see a little bit?
Yeah. Yes. Slowly. Yes,
Okay.
it does. It does.
My
Well, if I would just go back for a sec to the US 30 trade that we just took,
okay.
the long trade,
Yes,
I
sir.
saw it and I took it from on the 5 minute, and I just got out at close to the top, just because that also happens to be near a resistance level, a Fibonacci resistance level, an indicator that I have, and then it totally collapsed, but it didn't go anywhere. I don't think it didn't go anywhere near where the stop loss was. So everybody is still in that going long, or that changed?
So I'm still in this trade. So let's talk about it. It really is going to come down to your management. How you're managing is going to be 100% up to you. I recognize that everyone is going to be doing, hold on, let me mute everyone. There we go. I muted everyone just so there's background noise for a second. I'm coming here saying, look, hey guys, I'm really excited about this. I found a way and this is going to change your life. And I think that I'm not kidding you. Between this and then even the dragonfly, oh my gosh, you'll never work again. Like, I am that geeked out. However, I recognize not everybody has enough funds in their account to do what I'm doing. I'm sorry, I had to clear my throat. But actually, I think this weird mushroom coffee is like, hold on, let me get some water. It was weird in my throat, but I digress. I am managing it right here. So what this equals is Did we come up technically to go ahead and take profit? We did. Our low is here. We have plenty of room to let this trade play out. Let's see. Let's zoom in. Here's our low. Our 1 hour ATR is what, 700-ish pips? Okay, let's measure this. From here to here is 2,000. You got 3,300, give or take. That's a big ask. But when I'm making this analysis, I'm trying to make it in a way that anybody can kind of come and go as they please, if that makes sense. Does that answer your question?
Yeah, it does. It does.
Okay. I was gonna say something, but I was busy trying to clear my throat. I don't remember. Here's where we're at. I would have caught like maybe a baby scalp on some of these even down, but trying to do that in real time is hard. It's really hard. And then trying to get both directions in a single call, again, hard to duplicate, hard to prove. So I veer away from doing that too often, but it is possible. It's time for that automatic trading and making money during London session while I'm asleep. Yeah, right? I felt that. I do. Guys, this works. Not just because I say so, but it works. We have, what was it? I think even on TradingView, if you go back and look at all of those trades, and look at how many of those targets that they hit, it's mind-blowing what we've been able to accomplish together. Mind-blowing. And I understand that it takes a skill, it takes capital to be able to take that trade, let it play out, take another entry, let it play out. Great, woohoo, it's awesome. I get it. But that's the part of the equation you have to figure out. I can come to the table and help you figure out every other part of the equation. Every other part, I can help you. But that one is kind of on you. So, can you help me understand the golden ticket indicator? I really don't get it, but I understand the MACD. So the last thing I'm going to say, I don't know why my throat is so dry, y'all, but the last thing I'm going to say before I hop off to you two, to Elliot and to Raven, is this. Go to the pinned post. I know there's a lot of historical data there. There's a lot of tons of calls. There's a plethora, I mean, an insane amount of hours and hours. Everything you need to know from the dawn of time is in there. Everything about the golden strategy, how to set up your charts, templates, the rules for the strategy, and everything between is there. If you truly want to make this strategy your meal ticket, then do yourself a service and actually go there. We can spend days and days and days going through this, but that's my first piece of advice is go to the pinned message. All of those calls are there 100%, and you'll know everything you need to know. Secondly, if you want to understand the golden strategy and or the golden ticket, okay, start here, start naked. Because all that golden ticket is doing is it's painting arrows based off of the rules that are part of my strategy. That's all it's doing. Of course, it's got some cool other features. It's giving you lot sizes, and it's giving really comparable to the original risk and reward that we were looking. But of course, I was always really mostly looking at structure for the stop loss, but that's harder to duplicate. So it's all there. If you want to understand why the arrow itself is painting, I would come here and get naked, get completely naked, and say, okay, the 3 is crossing the 50 and we're below. That's going to give me an arrow. Say, okay, if your 3 and 9s are turned on, the 3 and 9 is turned on and I'm below, that's why I'm getting an arrow. You'll understand the arrows. You'll understand the bias change. You'll understand the whole picture, but start here. And that's what I would tell you. For the person who just DM'd me, can you help me understand the golden ticket indicator? Every one of those arrows have a meaning. And the meaning is one of the rules for the entry. That's it. It's a basket of information. Does that help, Raven? Let's see.
A bit, but I'm still a little bit confused with like the lines of it, not the arrows.
What do you mean, the zero line or the?
No, the like I don't know what you call them, but the orchid and green lines, like how they overlap, and I don't understand that.
Those are the last fractals that painted. So last up fractal, last down fractal.
You mean on this?
No, on the golden ticket.
Thank you. Those are not the last fractals I painted. Okay, so right here on the golden ticket, what we're talking about is, again, I still revert back to this. This is our fast MACD. This is shown in a histogram view. That's all this is. It's showing the amount of volume, the amount of momentum in this move, right? It's, oh, I don't want to use the wrong word because it's so particular, but it's the size, right? This is the difference. It's the differential in the EMAs, essentially, is all it is. It's the space between. So when the space is really big, that's why this is really big. And when the space is really small, that's why this is really small. So, I mean, I think in layman's terms, without getting too nitty gritty, would be this is measuring space. It's the space between, right, these EMAs in short. But the two that you're looking at right now, right here, are, this is the standard. The magenta line, this orchard, is literally the standard MACD. It is the #1 used oscillator in all of the stock market, or at least it was for some time. It was the most used oscillator in the entire stock market, Wall Street kind of trading platforms. So when I say it's kind of a big deal, I mean it. It, not because I say so, but the market itself says so. And if it's that important, the perception of it is also significantly important. The green is just a faster version of that, right? So it's a sped up version. So it's faster, it's more reactive, whereas the orchard is less reactive. So figure the orchard is kind of a way of displaying the overall trend, or the bigger trend, the slower trend, whereas the green is the more the impulsive, the fast move. Does that answer what you're asking?
Yeah, that makes more sense now.
And honestly, go watch a video on the MACD, or go look it up, and you'll understand. Like, I don't necessarily need that much detail, but if you want to understand it, you can. The arrows are just giving us the rules. The middle is just the bias line. Like, when it's green, we're saying we're in a bullish bias. When we're orchard, we're saying we're in a bearish bias, such and so forth. And the arrows are telling us the rules for the strategy. That's all it is. And the changes of those rules. Yellow is neutral. That means some but not all conditions are met. Some but not all conditions are met. That's all. Or that we're in a range, right? And that's kind of what I
Okay.
would tell you. But to understand the strategy, I still say go here. Get naked. If I could find the chart. Get naked. And believe it or not, I've had people who went back to this who had been around for a year or two, and they're like, holy cow, this strategy is way easier than I make it. Because when you see it like this, and you have all that noise taken out and all the nonsense, it gets a little easier. So fine, we're looking, this is the 5 minute, we're looking for anything in regard to the next higher time frame, which in this case is a 15. It just gets easy. We buy. Okay, we're gonna miss out on this sell, but we know when we break through and retest, we're gonna sell. And it becomes so easy over and over and over again. This just cleans it up quite a bit. So that's all.
Okay. Yeah, that makes sense. That makes sense. But the golden ticket itself was confusing me because of the overlapping green and orchid lines. Like that, I didn't understand that.
Well, first off, did I answer that question? So the orchid line right here, this is the slow MACD, this is the fast MACD. So all this is two MACDs on top of each other, all fancy like.
Oh, okay. Okay, that makes sense now.
How long have you been trading, Raven?
Less than a year now. My dad, Clifton Bradshaw, he brought me into this last year.
Oh, awesome. Well, tell him I said thank you. How old are you, if you don't mind me asking?
I'm 20.
All right, awesome. I think we need more completely incredible women investors. Like, I think so. You definitely have to stick around, and I hope that you inevitably find what you're looking for. I know it's a lot to learn. Honestly, you're in a better position to learn it than anybody else on here. Some of these people I'm not getting because they're not bogged down with 20 years of opinion and information that is just overloading their brain. You are in the best position to get the most out of this if you want the truth. Because it's
I
hard
wish
to
I started when I was 20. Oh my goodness.
I know, right?
I have socks that are 20 years old.
We're gonna tell Elliot to throw away the socks that are 20 years old. Okay. Mother, but seriously, you are in the best possible position. So go to the pinned message, go through all those videos, go to download a naked template. If you need help, I can help you, or I know your father can help you too. and then just
Mhm.
practice this 30 minutes to an hour. There's a book, it's called 212 Degrees. It tells you that if you practice something for an hour or less every day for 5 years, you will be a national expert in 5 years or less.
Yeah.
Okay.
Great. And I give you some advice at 20, like don't rush the process. Just let it run naturally, and just stick to it, because where you're starting out, if you just stick to it, you got so much time on your hand that you're gonna be a freaking boss.
Yeah, I recognize that. I'm glad I'm starting out young. And my dad wishes he started out at my age too.
That's awesome. He gets all the brownie points. He definitely does.
Yeah. I'm understanding the golden ticket, the golden strategy more now. It's getting there. Like I understand all of um the confirmations, and I just need to practice more.
All right, awesome.
So
Well, I'm excited for you. Keep it up, definitely. Remember, it's only three. It's three confirmations and three considerations. Like if I had to
mhm.
sum it up, that's a really good way to help your brain remember, is it sets of three. So, but I'm excited for you. I'm definitely excited for you.
Thank you.
All right, guys. Well, that's about it for today. Long-term picture. We still got a great picture. Yes, everything's kind of doing its own thing. If you have questions, comments, screenshots, please put them in the group. Otherwise, I hope you guys all have an incredible, amazing weekend. And I will definitely be on again next week. And take care. And thank you, Jonathan, and everybody else. Michelle, you guys inspired a moment which is literally everything I'm hoping to build. Like that's my dream, is that community right there. And you guys, in our own little baby way, like we're achieving that. So Felicia, Barika, Scott, Barbara, everybody, Cordelia, everybody. Thank you, thank you, thank you. I hope you guys have a beautiful weekend, and I will talk to you guys soon.
Thanks, Jenny.
Thanks for